Hi, fellow traders. Well, we're off and running on another Monday. Started off a little slow, a little frustrating, but we ended up strong, and we want to take this momentum and sustain it throughout the rest of the week. But before we get into our recap, I just want to share this thought with you. We have to change our mindset when it comes to failure. We as traders, we go through this try-fail process over and over and over again. Even once we achieve some success or some level of success, we have to go outside. We have to challenge ourselves in order to get to the next level. Like, we're trading small size. If you're trading 100 shares, 50 and 100 shares, and you become consistent with your execution and all that, and then when you try to bump it up to 300 shares, you may run into some issues because you're going to have some issues dealing with your risk management and everything. You're going to be losing more money on a stop than you normally would, and that's going to create a little bit of issue. I know trading in the simulator is not it's kind of not the same. I don't care what anybody says. Trading in a simulator too long is like playing Monopoly. You can't spend that money, and it becomes a game to you. And that game and that challenge, that's why I don't like games. That's why I don't like challenges, any of that stuff, because it's not real. So every time you reach that level, when you're trading live, you're going to go through this. And you have to have a process that's going to help you understand that, hey, failure is not bad. We have to change that thought. That if the trade doesn't work, that doesn't mean you fail. It could mean that the trade just didn't work because of the market. And we have no control over that. No, none whatsoever. We just have to learn how to read what the market is doing, what it's telling us, what that particular trade, that chart is telling us. Not any indicator or anything like that. We're reading what the candlesticks are telling us. And that's why it's so important. I feel it's so important for me to stream my platform live, and not only just stream it, but you see the actual trades, because you see exactly what I'm seeing. You're hearing exactly what I'm thinking. Now, sometimes it may not make a whole lot of hell of a sense. It may, something might slip, but that's what I'm thinking. That's as raw as it gets. And I'm not an entertainer. I'm not a marketer. I'm not anything but a trader and a teacher. And that's it. So I'm all about business and about teaching you the skills that you need and learning how to navigate this try-fail process is a really, really important skill. And reflection is the way to do it. Every recap that I do, I'm reflecting on each trade. And that's how I'm telling you how I felt in the trade. I'm telling you what I thought, what made me enter the wrong time, what made me exit the wrong time. All of that I'm sharing because that's my reflection process. And if I gained a failing grade on my execution, I know exactly why. So when I try again, I'm more likely to fall into the success mode, and I can continue moving on until I run into a stumbling block again and I go through the cycle again. But as long as I have that reflection in my toolbox, I'm going to keep moving forward. You see, what we all want, we want to be like this guy. He's taking a break, but he's there stepping up. He's learning something, taking a step up, taking his time, learning something, taking his step up. Sometimes he may have to step down a little bit. Sometimes we may have a little down downtime, little challenges, but he's going in the right direction. But too many of us are turned upside down, and we're disoriented. And so disoriented, we don't know how to turn this thing around. And again, reflection can help you start to put pieces to the puzzle together, get you flipped upright, and then you can start climbing the stairs. Now, it's very, very important that you guys, understand that and know that losing trades, a part of the business, is not a failure. What you don't grade yourself on your money, whether you make money that day, whether you make money that week, whether you make money that month. That's not the grade you want. The grade, not your accuracy. The grade is, did you execute your trade plan? And if you executed it perfectly and you get an A in execution and you're not making money, then we know exactly what the problem is. The problem is in your trade plan. Because if you had a viable trade plan and you were perfect in your execution, over a period of a month or even a week, you should have made money. So at that point, we know exactly where we need to go to work on it. So just wanted to throw that out there. I want you guys to think about it. I know a lot of times, a lot of the classes that I've done, I talk about this and I push reflection because it is probably one of the most important things you can do in terms of your studying to help you grow, is to take that time at the end of the day. So our day trading class is starting up. We did the intro. That's already posted here on YouTube. So if you didn't see it, you can catch up with it. But we're going to be doing it in chat every Wednesday at 4:30. Just like we're moving into the day trading class part of the roadmap. So we're going to be really digging into this technical analysis, reading price action, understanding what the candles are telling us. And, all of that, this is going to be game changing. So you guys get ready for it. All right, so let's take a look at this morning. Now, this trade frustrated me beyond measure. Okay, I can't tell you how much this frustrated me. I knew these trades that have this catalyst, I think it was an FDA approval or a drug trial win or both or whatever the case is, these things run up, but then throughout the course of the day, they come back. They will sell off. They will give you a short. Most of them will. So I'm looking short at this. I would trade it long if it did crack and start to run. It may have given me a good long trade, but eventually I knew it was going to come back. But this thing set up, I had to wait for it to get under the 20 for me to short it. And here's the opening range low. And remember, if it breaks the opening range low, we're going short. 5-minute opening range breakdown. If it breaks the opening range high, we're going long. Opening range breakout. And I'm running this off a 5-minute candle. So we got below the 20. I got in and ended up before I even took my first profit, I'm looking at my let me see if I can find it for you. I'm going to pop it out and show it to you. I'm looking at my trading limits tab. Now this is what I use when I'm vetting my stocks to tell me whether I have shares to short or not. We had a ton of shares to short. Before I even took my first cover, I looked, all of the shorts were gone. There were no more shares to short. So that kind of threw me off a little bit. And I'm like, what do I do? Because usually when this happens, we get a squeeze. And all I was doing was looking for the squeeze to happen. And that got in my head, and it caused me to take profit here instead of here. And because I took profit here early, I ended up getting stopped out at break even here. And the trade came back and it worked. Now, ordinarily, I would have got back in on the break of this low, but there were no more shares to short. And it just made me more and more frustrated that I had to sit here and watch my trade happen. Now, I thought it was going to come all the way down to the 100. That was the plan. But it did break through the 50, and it did make a whole lot better move. You know, I got in at 40.82. We got all the way down to 37. You know, that's over a point and a half I could have taken on this. But, you know, that's what frustrated me. And unfortunately, I let the fact that I knew that once I got taken out, I could not get back in. And that kind of worried me a little bit, because I was trying to determine, do I just hold this and hold it since I can't get it? Or I just kept thinking the squeeze was coming in, so I need to take profit. And I couldn't get that out of my head, and that's what had me screwed up here. But still survived with a couple of bucks. And that's all I survived with. But I filed out of way. You know, normally I'm pretty cool. But in this case, this is something that just popped up, and it's a rare occurrence. This has happened maybe one other time. And so I didn't really have a plan for dealing with it, but I do now. So next time this happens, I will definitely be ready. But this was a perfect setup. I did the right thing by waiting, not anticipating and jumping in and shorting into the 20, and that's about all I did right, other than stopping out at break even. Here, taking profit too early, I can't give myself a good grade on that, because it wasn't the right thing to do. And it wasn't what I had in my plan to start with. So that was on ACAD. PayPal was the one. This one, right up until the end, was just absolutely perfect. Absolutely perfect. This was on our reversal scan. I was looking at this for a reversal, but you could see where it bounced here. Here's a level that it looked like it was going to bounce off of. This red line, this is just where it actually bounced. So this was intraday support. This was the daily level here, this green line. So when we look for a reversal, I'm looking for some strong move down. Just like for swing trading, the oversold strategy, I'm looking for a parabolic move down. But then as we get closer to support, I'm looking for the candlesticks to get shorter and to have a little bit more indecision in it, because that's telling me that these sellers are getting taken out, the buyers are coming in, and that's price action, guys. Price action is reading what the chart is telling us, not the indicators, not the moving averages and all of that garbage. We're looking at what the candlesticks are doing. We use the indicators and everything to kind of verify what I'm looking at. So I use on Thinkorswim, let's go to Thinkorswim real quick. I'm using these lower deviation bands. These deviation bands are from the VWAP study. Now, you know how I feel about the VWAP now. I give it no respect. But the deviation bands get all my respect. And you'll see why. This is the deviation bands, because it's volume, it's weighted on volume and price. Those are the two key elements in price action. Whatever these bands are doing, that tells me who's winning the game. So if it's opening up like this is telling me the sellers are winning. As this starts to slow down and flatten out, this tells me that buyers are coming in. And we may be seeing a change in direction. But if it has to turn and start to come up. But if it stays flat, then I know that we're still in kind of a fight, and that if it keeps opening up to the downside, the sellers are still in control. But the candlesticks have to tell me, not this. This is what I use to verify, or just another way of verifying that I'm seeing this on the chart. So I do use Thinkorswim. I don't use these charts to make trading decisions off of. I mark them up because I'm streaming my trading platform so you can see it. So I'm taking data from the Thinkorswim. I'm transferring it here so you guys can see exactly what I'm talking about and what I'm looking at, in chat. So I look for this. I didn't like this big candle as we came down and we had these indecision candles, but I wasn't going to get in here at 107 and the 20 EMA is sitting here. I wasn't going to do that. And then I saw this big candle. Whenever you have a big candle running into resistance, 9 times out of 10, you're going to get some profit taking, and then you're going to get pushed through it. And that's exactly what happened here. The thing is, buyers didn't come in. The buyers didn't come in. The sellers took back over. We came back through. So we failed to push, and then we failed to hold this level. And once we got below this intraday support here, I was all over it. And I didn't want to take it. I didn't want to take profit here. I could have taken profit here, but this wasn't the move I was looking for. I fully expected it to get through this time. But if we didn't make a lower low, I would have taken the trade off, because the lower low here is what confirmed to me that we've got a chance to move. And we did bounce, but this level held. This pre-market support turned into resistance. We never did confirm a loss of the 9, and this thing came down. It's all about reading the price action and not getting spooked out. Now, if I was watching my P&L, I probably would have taken this thing off and just locked in a couple of dollars. But I don't look at my P&L. I don't care what I'm making. It doesn't matter. All that matters is watching the chart, reading the chart, letting it tell you what it's going to do. Now, I will bitch, moan, and complain and kick shit because the stock is bouncing and I don't want it to, but I'm going to stick to my plan. I'm just letting off some steam. I'm just venting frustration and just let it go. Because I'm an emotional person and I'm not going to try to eliminate that. If I try to fight my emotions, I'm going to be a really crappy trader. So what I do is I know how to deal with it. I set my trade and I let it go. I may sit here and kick and scream and fuss about this, but my hands aren't touching it. So it did come up a little bit, never did break that, never did take out the 9, and I said, oh yeah, we got it. And it did hold up here a little bit, but then we finally sold through. And here I got a little bit. I just got back from lunch and saw this thing, and I'm like, oh yeah. And I took some off because I thought we were having trouble here at 106, and I really should have let it come down. So this was kind of a overreaction here, and I should have just left it alone. So I had to lose points on that. But we sold off, bounced a little bit, still held a 9. Whenever this trend continuation trade is working, the 9 is a trailing stop. So as long as we stayed below the 9 and the 9 was moving down with it, I'm good. So perfect cover here, right on this 105.50 level. I think I got a couple of cents to the good on it. I think I got 105. 105.35. And this thing worked, and took some more off here. 104.50 right on this level. And I had my target set. I had a range order to stop me out at 105.50 and had 103.95 as my target. But guess what? This thing bounced, and as it started coming down, I took it off because I thought we were going to sell through this level. I had a flashback of, I forgot the ticker last week, where I hit my final target, I took it off, and it went on to tank like 2 more points. So I had that flashback, and that's something that will cause me issues sometimes. Not sticking to this last cover. It's the last piece. I know I booked a ton of profit. I know that I'm not going to lose any money on this. I may lose some profit. So I just let it say, how low can it go? But I ended up giving back about 50 cents worth of profit on this. And, it is what it is. Only $25, but still. No, it wasn't even $25. It wasn't even much I gave up. So it really wasn't a big deal. But the money I gave up wasn't the big deal. The big deal was I changed my trade plan, and I should have left it alone. That was the big deal. So all I did was cost myself the extra $6 in commissions. Is basically what I did. So instead of taking it all off here, I ended up with an extra ticket here. So I can swallow that. So there's no big deal. 327.61, not bad for the day. And like I said, today I just didn't like, the market had gapped up, but then it was selling off, and I just wasn't comfortable. So I traded smaller size today. ACAD had a nice, it's a $40 stock, but it had some pretty big spreads at the time. And I didn't want to get caught in a 30-40 cent spread with 300 shares. So I went in 200 on that. PayPal, same way. I knew PayPal could swing. You could look at the candlesticks. Even though these last couple of candles here were smaller in range, I knew that if I got in 300 shares, I might get stopped out if it bounced again before the move actually happened. So I went with 2. There's no harm in sizing down as long as you're managing your risk. And I'll take a $320 day, on a $5,000 account. Well, $6,000 now, but I'll take a $300 day. So let me get my calculator out here, because I can't. I got this calculator, so I can't figure this on my own. So 5%. That's not bad. Gain 5% in a day. That's better than any bank. Better than any bank. And if I did this every day, if I traded small every day and made $300 every day this week, you know, how much is that? $1,500. So who wouldn't want $1,500 a week growing your account? How fast will you get to 3 to 30 grand by doing that? All right, guys. So that's gonna do it for me. I ran my mouth enough. We'll be back at it tomorrow. We'll see if we can keep this momentum going. So you guys have a great night, great evening, and I will catch you tomorrow.